Good day, everyone. My name is Mel. I'm TechnoTrader's Senior Technical Analyst and Student Support Specialist. I'm excited to welcome you to Analyze Your Trade with Martha Stokes, CMT, TechnoTrader's co-founder, CEO, and head instructor. First, we have to explain our disclaimer. We do not recommend stocks. TechnoTrader teaches traders and investors how to pick stocks and make trading decisions for themselves through our comprehensive trading methodology courses. This session is for educational purposes only. Today, you have a chance to experience the analysis we teach and receive expert insights on your trades, just like our students do, from a long-term chartered market technician and highly respected expert in the trading and investing community. Martha will be taking your requests to analyze any stock or ETF from the US or Canadian stock markets. So go ahead and find the chat button now so you can start typing in your symbols. Okay, let's get started. Here's Martha.
Hi, everyone. I always start the end of day by looking at my market condition scan and doing the analysis start there. What we need to know is what's going to happen tomorrow. Futures won't tell us that. It tells you how you start the market open, but the rest of the day can flip-flop and turn in the opposite direction that futures were in that day. And I'm sure a lot of you have known that. So the first thing I do is I say, these scans are very intuitive. I want to know all the stocks that moved with momentum to the upside, all the stocks that moved with momentum to the downside. And we can clearly see that there is a lower than average momentum going on from the broad base of stocks, but it is favored to the upside for tomorrow. There aren't enough selling going on right now unless there's some unusual event that occurs. We have been having this a lot. A lot of times we have the market open, it gaps down, and then support the market comes in and moves the stock price up. You have the sell side institutions and the buy side institutions supporting the market. Remember, it's not small investors versus Wall Street or Wall Street versus Main Street. There are 12 distinct, entirely different market participant groups. Each one has their own intention in going on. So this is what I'm looking for. I want to know all the stocks that have been showing dark pool accumulation, and we have an unusual month where we have dark pool accumulation occurring early this year. Usually it starts in late July and early August for the fall rally. We're seeing a lot of activity from the dark pools of buy-side institutions. The sell-side institutions are using QE money, quantitative easing. They're getting digital credits, and they're supporting the market because they want the market to stay stable, despite what retail news is causing retail investors to react to. You are reactionary, they're proactive, okay? And you've got to switch that. You've got to be proactive as well. Bottoming scans, we're in a bottoming market condition that is shifting to a moderately uptrending market condition. And when that happens, indexes will move sideways. We have a very low number right now, which means a lot of stocks are moving today. And we have some pretty high percentage of change going on. We also know which stocks, what industries were favored today and what industries were not favored today, and they were being sold. We have a consolidation scan that tells me where the pro traders are. We have a turn at a top scan, which is very low. We're not having a lot of stocks turning in a trading range because we don't have trading conditions. And then how much percentage of change, what is the relationship between the last 20 days and the current 20 days or 25 days? I set this at different intervals to see how price is improving over time because we have professionals dominating the market right now. So Malay, did you have a stock that you would like to show?
Yes.
Yes.
Yep, Fred wrote in ACEL.
ACEL?
Yep.
Okay. So we have a sideways trading range with this. This is a wide trading range, and it has a low and highs. And what makes a trading range unique is the fact that it has irregular highs and lows. Makes it very difficult to trade because there is no consistency there. And what happens is that you get stuck in a run that stops and halts and moves up and down. It is a trading range is a trend that is dominated by smaller funds managers, is 10 or 15,000 small funds managers. They're not on the professional side. They're designated as retail, and they can be very dicey. This would be very difficult to trade because there's a lot of up and down rather than some. There's one straight shoot up here, but it catches on this resistance pattern. What you want to wait for is when this starts moving up and up and up and starts hovering near its all-time or recent highs in the trading range and starts to compress in price. What you have to understand is the dark pools do not rarely move price. They only move price when they're supporting the market and the value of the stock has fallen below its fundamental levels. So price is below the fundamental levels. You can't have that. And the dark pools will move in because it's a bargain price. You need to be buying with them rather than against them. Often you're moving against them. If we look at this on another chart, when we see the indicators, we can see that it still remains with some speculative action, but this is all smaller funds action going on rather than something that you can trade. This is a tough trade. You want to wait for the stock to move up its price and then show a compression pattern, and then there will be a breakout that you can use. So far, we have a peak here, warns of the stock turning, a peak here. This is a day ahead action that shows that we're going to have a turn down. This indicator is fantastic for swing position traders because it warns a day or two in ahead, allowing you to get out. This shows that the stock is not going to go down any lower. This is as low as the low is going to get. We had some dark pool support the market move in, and then pro traders drove this back up. And then it settled out because the stock is not improving as it should at this point in time. It doesn't report until 7:29, so it has time to build a consolidation right close to the highs of these, but not above it. Then HFTs would gap it. If that occurs, and you see that tight consolidation moving across here, then it would be time to consider it as a possible entry for a pre-earnings run. We're going to have a lot of pre-earnings run. We're already starting to see pre-earnings runs or no pre-earnings runs, which is important because you don't want to get into a stock that's going to have a really bad report if you're going to buy it. If you're going to sell it short, you have to consider how far can it go before the dark pools will see it as a bargain price and drive it right back up the same day that it has. So this is a stock that is not ready to do anything with yet until it is able to move up and consolidate.
Next one is URBN.
Urban, okay. This is a very good stock. We have a basing bottom pattern. Basing bottoms are brand new. They're fairly new and relative to this. This is your buy zone right in here. This is where the dark pools start buying in and slow and stop the runs down. If you're losing money on selling short when the market is running down, it's because you're trying to sell into the dark pool buy zones and they're going to take you out. We also have some pro trader nudges going on in here. They're setting up, and of course, then it gaps up once they occur, and there's a big gap right in here, and that makes a difference. So then it moves up and it turns and starts to come down again, but it catches on the support level, which is their buy zone again. And then we have another run up and we have another gap up. So we have pro traders nudging the stock, and then it will gap, and nudging the stock, and it will gap up. If we look at another chart, we can see that this is a bottoming formation right here. It's confirmed here. It's confirmed here. This is as low as the stock is going to go. It's not going to go lower. It can run up with gaps, but you have to be in here. You can't wait for this gap, although this was a nice run. You want to get in before they move. And there's a little nudge here and a little nudge here. Yes, it gapped down a little, but then it moves right back up. Nudges are a brand new candlestick pattern. I like to keep everything clean. Candlesticks are an indicator unto themselves, and you need to watch and monitor those. So this is slipping down, but it won't fill entirely because it was a gap over, a breakaway gap, and breakaway gaps seldom fill. So it broke above and is settling a little bit, but it should start to move up again. What you want to watch for is nudges. Nudges are very small candle patterns. Pro traders do not move price. Smaller funds managers and you move price. You're the speculators, you're the gamblers, and all they do is nudge to make some money. And as you're buying, they often are selling. You need to understand this process, because if you don't, you will never be as successful as I want you to be. And again, we can see that this is warning that this is going to correct. It's very important to always remember to understand what's going on. Dark pools build the bottoms. The tops are controlled by retail traders and smaller funds running and chasing the stock up. Whether it can go higher would require looking at a weekly chart, and it's pretty high. So it's probably going to correct down a little bit more because it is over speculated and it needs to retrace and correct back down a little bit, but it won't go all the way, and or move into a sideways pattern. If it moves into a sideways pattern, that would be ideal. It's still a reasonably priced stock and it has opportunity to continue to move. I don't think it's, and it has been moving up on it is above its new high. So that's a good thing. Okay, anything else?
Next one is silver, SLV.
Okay. For trading stocks with swing trading or day trading, gaps are kind of tricky. This is an ETF and it will follow the silver commodity. So whatever the silver commodity does, this ETF will follow, because the ETF developers are required to maintain a trust fund account with certain number of shares of silver or holdings of silver, so that they can have a backbone of if they need to sell if they have to. That's so it guarantees this ETF. It is a very dicey chart right now, and it's moving up very speculatively. What happens is retail traders react to news, and the news has been very volatile and very contradictory, very confusing, and very scary. So a lot of investors and traders are very worried. We have the 401ks and the IRAs, and Canadians also have their retirement accounts. Those retirement accounts are controlled, managed, and protected by the dark pool buy zone. They are protected by the buy side institutions called dark pools, as they will support the market and keep it from crashing. So if any of those, we start a run on the 401ks and everybody's trying to leave all of their ETFs, their mutual funds, and dump them, the dark pools and buy side institutions will come in and quiet that down. The last thing we want is a stampede, a run on at 401ks and IRAs with everybody leaving because they're scared to death of what's happening. As long as we keep them above 20%, the 401k holder and the IRA and all of those others have been told that they should hold through minor corrections, which is true. And they will hold so long as it doesn't start dropping below 20% and go into a bear market. It has to be 20% or lower. So a correction is, this is a correction. This is a correction. This is not a major thing. It is a ETF that you can trade, but there are easier ETFs without gaps and without all the other difficulties. You want to be able to get into it and be able to get in with confidence and ride it up for a certain part of time. It is currently over speculated, and we can see the spike on the chart right here telling us that, warning that this is going to correct. This is just a warning that's going to correct. How far it corrects depends on the market condition. But it does tell you, if you got in here and you rode it all the way up, that this is the time to exit and take profits and be happy. Trying to get out at the highest high is not wise, because you will lose more money than you will gain. Okay, next one.
Next one is URNM.
Okay, we have a short-term bottom. This is also uranium miners ETF. And this one looks much better. Why? Because there's not so many tiny gaps in between. It's been trending down. It has been in a trading range. It's been trending down recently. So this is the ultimate low that it's going to have. It has been established. We have a shift of sentiment. This is where smaller funds are selling as dark pools are starting to buy, and they're putting on the brakes of the selling down. You don't want to sell short into a dark pool buy zone. And this is an area where they're accumulating this. It shifts from red to short gray to short gray on the above, and then it runs up. This is an excellent indicator. It's based on the uptick, downtick rule, and it helps you see where the dark pools are accumulating, because oftentimes their activity is hidden. They do not move price hugely. So when we see a big long white candle, it is either a support the market candle or a pro trader also getting into the mix. Pro traders hunt for the dark pools and the buy zones all the time, and they make a lot of money every year because they are in and they nudge, and then the HFTs can run and gap it. If something gaps up at open, it is always high frequency trading firms on automated systems with AI, but they can also get it wrong. So this is a good one because it's gapping up and running, but you have resistance levels that you have to factor in. Run gain potential is important, and a lot of you don't even know what that means. What that means is that you are trying to calculate how far the stock can run before it hits resistance, and is there enough momentum and profit in each run, and are they getting longer runs, or like this one, the runs are getting shorter and shorter and shorter as far as price improvement, moving price upward. If you have runs that get shorter each time, what's happening is the retail buyers are evaporating. They're running out of money to buy and chase the stock after HFTs have gapped it up. HFTs fill the orders just milliseconds before the market open. They'll fill the queues with thousands of very small lot orders. Their role is to make or take liquidity. They are maker takers of the market. They've been around for over 20 years. They are part of the market, and they help the exchanges survive because it's very expensive for all of these opportunities here nowadays for the exchanges. So we have a run that's running up. The run gain potential was pretty good here, but now it's shortening and it's shortening and it's shortening and it's shortening. It's shortening because we're getting into a resistance factor here that's pretty substantial. And for a swing trading, it's going to slow it down or stall it. What'll likely happen is it'll move into the sideways trading range for a period of time to build a sturdy support level, and also because that's probably where fundamentals are likely to be right at this time as we head into earnings season and anything else with this. This is a spot uranium miners ETF. So it's an ETF, so it doesn't have earnings reports or anything like that. It is simply an ETF that you can trade in your portfolio or individually that allows you to participate in all the other activities, all the different metals and mining and that sort of thing. They will always follow their trust account. So whatever it is built and based upon that's in that trust, it will have to always follow that. It makes it a little more difficult. If you're a beginner, I would encourage you to start with stocks and then move to other types of ETFs and things, because you will find that you learn a great deal about how markets move. For this kind of stock, I would say that you have ETF, I apologize, ETF, you have a lot of things that you are not aware of, and it's very volatile toward what is going on as far as what people believe and what news is going on. So it's more difficult to trade than some other stocks might be. Okay, next stock.
Next is Palantir, PLTR.
Okay, this is a baby that we know about from a long time ago because I started talking to students about this stock way back in here when it started doing what's called a platform. And you can see that these sideways trends occur and then suddenly it starts to move. A platform market is when is one of the market conditions. There's 6 primary market conditions. A platform market condition is when the retail groups are very scared of the market and they're not buying stocks. So it's dominated by dark pool buy zones and dark pool activity and pro traders. So it moves up sideways, 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 and then suddenly everybody realizes, oh, this is a great stock. I want to buy this stock. Now it starts trending up with more speculation and more activity. It is a company that came out and has some really great new software infrastructure. As we go into AI and integrated AI and hyper automation of IT departments, all the spatial computing and all the new technologies, there's over 20 new technologies advancing the market. It doesn't matter what's going on in the world. It doesn't matter what's happening individually. What matters is how many new technologies do we have coming out of this pandemic that are going to drive the future of this economy. Our economy is the largest in the world. Our stock market is the largest in the world. The stock market leads the economy always. And it went into a little nice sideways pattern again, very consistent highs and lows, which tells me the dark pools are back in here. It reports in 8.4. It can improve its percentage of shares held by institutions, but it will shift sideways and go sideways for a while until its earnings report establishes where the fundamental levels are. In a platform market condition, the fundamentals are always going to be in this zone. That's where the fundamentals are. So if they move up their buy zone, that means the fundamentals have risen also, and that's a big cue. And we can see if we check the secondary factors, we can see that we're a little overextended here, so it's going to retrace. These are great for swing trading because it tells you well in advance that you need to get out and how to get back in. When it spikes to the bottom, you want to get in. When it spikes to the top, you want to get out. It gives you a day or so ahead of time. This is a company that has a long-term prospect that is going to grow over time. It may become a big blue chip later on, but it has a lot of opportunity. It had exponential growth, and now it needs to pattern some of that out. It's necessary to sustain the uptrend in a moderately trending market to have periods of sideways action. It's normal, and it's difficult to trade within those ranges, but the breakouts are fantastic.
Next one is SPY.
SPY is the most popular ETF in the world. Everybody trades it all over the world, and it is a very good beginner ETF because it doesn't have many gaps. It has a pretty consistent patterns that you can rely on. You would be watching. This is different than the index. The volume here represents the volume that is going on for the day. It doesn't necessarily reflect what's happening with the S&P 500. This quick, sudden change of shift of sentiment is very important. It was selling, massive selling, then all of a sudden shift of sentiment. That's when the sell side institutions came in with QE money, digital currencies, and pushed the market up because that's what they were told to do. You do not want to be selling short and then all of a sudden have this move way up beyond your sell short, huge loss. It is resting here, and I expect it because it would be logical and reasonable. And if you can learn not to pay too much attention to the news, but to plan on paying attention to the charts and what the charts are telling you, then you will be ready for the next move up. The market is not dependent upon politicians. It is dependent upon the buy-side institutions, the sell-side institutions, the professional traders, and then later on the smaller funds managers and retail investors, and those with 401ks. The 401ks are the primary source of income for everyone in the market, including the holder of the 401k or owner. It's shifting sideways, and this is absolutely perfect, with lows about in here and highs about in here, and it can move sideways for a while, and it needs to. It needs to adjust and pattern this out. This is going to look, this chart you could lay over this S&P 500 and it would be almost exactly the same, not exactly, because you can never quite tweak it perfectly. But what you want to look at is not price, because it's following the S&P 500 so much, but the indicators that will show you that there's a shift of sentiment, and so it's going to move up. And we have a little choppy pattern here, and we have a huge shift of sentiment right here. This tells us that's the end of the selling, folks. Get ready to buy this ETF. Get ready to get into this ETF because it's going to move. It moves down the next day, which is typical of panicking retail traders who don't know what's going on. So they sell and the smaller funds sell, and then they get wiped out the next day. And it's over, folks. They keep selling because they think the market's going to go down, because they think that news drives the market. News only drives the retail side of the market. It doesn't drive the professional side of the market at all. It doesn't bother them. That what they're worried about? Cybersecurity. They're worried about developing new technologies. They're worried about developing new digital assets, non-fungible tokens, cryptocurrencies. So the stock market has everything in it. So you don't have to go anywhere. You can be in the stock market and trade anything you want. That's what they're focused on. They're focused on corporations. How are the corporations adapting to the tariffs? Because most of the corporations are totally unaffected by the tariffs, most of them, because they already have moved. They've already become manufacturing in the US. They started that 6 years ago during the pandemic. So this is already happening. And it's very exciting. So what you need to do is set aside all the retail news and pay attention to what the market is doing. What are the buy side doing? What is the sell side doing? What are the professionals doing? Because then you will be with the action rather than constantly against it. Okay, next.
Next one is MCD.
MCD. Okay, I've already talked about this a little while ago with somebody, students probably. We have mentoring sessions like this, and they send in their picks, and I analyze them quite in depth. I'm short of time here, so I'm rushing through it. But this is where the fundamental levels are. It tried to move up its fundamentals, and it's dipping right back down. It reports in August. It might improve, but the fact that it's dipping back down is not good, and this is not good either. This is some selling. This is rotation. Dark pools rotate out, so they're selling some inventory to buy another stock that's going to do better because they have quantitative easing and they have quantitative analysis and they have AI doing quantitative analysis and they're checking that. One thing that is not happening, folks, is traders going and losing their jobs because AI is trading for them. That is not happening. I just finished an AI course and all in depth to show that the traders, there's more and more traders. I have more and more professionals coming to me all the time going, I need to learn how to understand this because they are trading. They are trading. JP Morgan again was yelling and snarling at his senior traders who are still at home and they're just kind of going, we're not coming back to work. We're working from home. But this stock has failed to capture a higher growth rate. Now, by the time we're here, we're in the second or third week of June. In early July, earnings season starts. We have 2.5 months of data already. We know the buy-side institutions know what that report's going to be. So when you look at the charts in the next couple of weeks ahead of the earnings report, that should start to display what is going to exist for that company. CEOs are stupid if they wait till the last minute to announce that their earnings and revenues aren't going to meet expectations. They always tell way ahead. But the McDonald's hasn't been able to capture the interest of people enough sufficiently to actually move it above here. It started to, and then it has moved back down. So it's not doing what it needs to do to survive in this economic condition. So it's going to have a problem. Okay, I'll take any questions that we have right now because I'm running out of time.
Yep, we have a great one to wrap it up with. Matt asks, are all dark pool transactions required to post all transactions at the end of the day?
Yes, but that not to you. What they do is they delay all their orders. They are buying and selling on all the things. They have alternative trading system venues. There's 50 of those. There's only 13 public exchanges. So you can imagine massive quantity. 80% of the market is in the dark pools. They send their orders to the national clearinghouses. So all the data comes in after the market closes and shows up on your charts. That's why I can look at these charts and know that this data is correct based on these uptick, downtick, your volume oscillators. Most of you don't use volume oscillators. You got to use volume oscillators. They're the new normal. You don't need to use price oscillators. You have price in your chart, in your candlesticks. Volume is important, price, time, and volume. And we need to know where the large lots are. These large lot indicators or hybrid leading indicators are something that you must have. You can't make the huge amounts of money that I want you to make and that you deserve to make. The more money you make and the better you trade, the better the market is. The more emotional you are, the less it messes things up for the professionals. They want you to have profits. They're not trying to cheat you or anything. So you want to get in and learn all of these things. Your candlesticks should be clean. I did a study a while ago that said